Well, from an oil perspective, not a whole lot of problems in Houston. We hear a lot about the ever-rising price of oil, the subsequent price hikes at the pump, and the record profits being made by oil companies. So, question, who's cashing in, and can the average Joe get in on it? Joining us today is our Wall Street guru, asset manager Scott Rothbort. Hey, Scott.
Good to have you here.
Thanks for having me back.
All right, the first question out there: are stockholders laughing their way all to the bank, laughing their way all the way to the bank these days?
In terms of oil and gas companies? No, they're not.
No.
No, they're not.
Why not?
Well, because the oil and gas market is a lot more complex than just looking at the price of crude oil. Let's also remember that while crude oil prices are going up, natural gas prices are at decade lows. They've gone down tremendously in the last few years. So a lot of these companies are involved not only in oil but in gas, and that's part of the problem.
So that balances out the stock price at the end of the day.
But it's even more complex than that.
Why?
Well, because there are actually three segments that companies operate in. There's the upstream, which is the actual drilling and production. So they go out and they source the oil and gas. Then you have the midstream. The midstream is involved in transportation. They're involved in chemical production. And then you have the downstream, which is the marketing and the refining of the oil.
So now, when we hear the head of Exxon telling Congress, hey, look, so what, we made $500 billion in profits. To a stockholder, I mean, doesn't that resonate or transfer in some way that you're making money?
Well, of course it does. The way it comes back to shareholders is in a dividend being paid to them or the stock price going up. But we got to be careful. They are making money, and let's also understand they do pay a lot of taxes as well. But they're not making the kind of money hand over fist that you would expect from a pure growth stock.
What about all these subsidies that we're hearing about that President Barack Obama wants to stop subsidies to the oil companies?
Well, some of them do get subsidies, but a lot of those subsidies are to help enable these companies to drill for more oil. But that's not what our real problem is here. And unfortunately, I think what we need to do is we need to start creating an infrastructure to transport the oil, because we have a lot of oil in this country, believe it or not, but it's landlocked. It's trapped in Cushing, Oklahoma.
So let's get back to the average stockholder. If we're looking at the newspaper headlines and saying, oh, well, I want to get into this. These people are making billions of dollars. I want to be a piece of it. Can the average Joe do that, and how expensive is it to do?
Yeah, well, there are two avenues that I would suggest. One is you can go with what we call an integrated oil company. And those are the large oil companies that are involved in the upstream, the midstream, and the downstream businesses, Chevron and Exxon. And I think when you want to look for there is companies that have some sort of annual steady growth, but also a nice dividend, with the dividend being above that of the S&P 500. The S&P 500 dividend is about 2%. So you can find some companies there.
Is this a good buy for your average stockholder, or is this only for the wealthy?
Oh, no. I think you need energy as part of your portfolio. Typically, the energy sector is about, and I'm going to use a rough number, about 20% of the S&P 500. So you should be invested in them. I'm taking a little bit of a different tack right here. I think that right now the opportunities are in the storage and transportation aspect. So I'm going to the midstream. And in the midstream, there are companies called master limited partnerships. And I think that's where the opportunity is. What master limited partnerships offer you, and they're complex, but they offer you a very high payout. It's not quite a dividend because they're structured as limited partnerships. I'm not here to give you all tax lesson.
And we should have full disclosure that you are an asset manager and you buy and sell these.
That's
kinds
correct.
of stocks.
That's correct. And I do have some nice positions in master limited partnerships, again, because I want to focus on that sector. But you're talking about companies that can pay you as much as 6 to 8% cash a year. And their earnings are growing. And it's in the part of the sector that is in the highest demand, Because like I said before, we need to store the oil and gas and we need to ship it. And that's also part of the dislocation in prices that we're seeing.
Now, there's been big money made in the storage. I read an interesting piece about a guy who made a fortune buying stocks in a company that stored oil, waiting for the demand to pick up, and then when it did, boom. Is that what they call that ETF fund? Is that what those
Well,
are?
an exchange traded fund most likely is investing in a lot of these master limited partnerships that I described before. And so he kind of is doing what I suggest you should be doing, is looking for companies that are in the midstream where they're going to be storing and transporting the oil and natural gas, because there will always be demand for that to be either transported or to be held in storage. And as we begin to hopefully explore for more oil and natural gas in this company, and hopefully if someday we're able to actually build that pipeline from the Keystone Pipeline from Canada down to the U.S., that's going to be a growing part of the industry.
Final question, how about companies that deal with alternative energies?
I would stay away from alternative energies.
Stay away
They're
from
just
now?
not making money. It may make sense from a green point of view, but not from an investment point of view.
We'll end it there. Thank you so much for your time and your insight and analysis.
Thank you.
Thank you.